And one of the recurring conversations that comes up is raising private money in this environment. And some of the conversations are around, all my investors are sitting on the sidelines. They want to wait this thing out. They want to hold off 2 months, 3 months, 4 months, and wait to see how things shake out over time. And then the other ones are like, I've never seen so many people knocking on my door trying to deploy money with me in this market. How can the same market happen to both of these different types of investors, and their passive lenders have two totally different perspectives on it? What's up, guys? Hey, I wanted to talk to you about many conversations that have happened in the past week that I think are very relevant right now in the real estate world. And that's raising private money and having conversations with private money lenders in this market right now. So as you know, the interest rates have gone up. As I'm filming this, they just went up a second time this week by 0.75%. The largest rate hike by the Fed ever, and they've done it 2 months in a row. We've been seeing the market kind of quiver, kind of shake, especially the single family world. Properties are coming down in price. There's price reductions. They're sitting on the market a little bit longer. And in the multifamily or commercial real estate and rental real estate world, sellers really haven't been coming off their price point, but buyers aren't coming up either. So there's this gap that we're seeing right now, and it's interesting to see who budges. Outside of all that, I've had many conversations with many people at a couple of different events that I've attended over the past couple of weeks. And some of the conversations are around, all my investors are sitting on the sidelines. They want to wait this thing out. They want to hold off 2 months, 3 months, 4 months. And then the other ones are like, I've never seen so many people knocking on my door trying to deploy money with me in this market. How can the same market happen to both of these different types of investors, and their passive lenders have two totally different perspectives on it? I think it very much dictates who's doing the influencing. Over here, where you have the scared private money lenders that want to wait it out, hold it out, they're being influenced by the news, by the media. People who write articles for a newspaper who are not full-time real estate investors, who are doing the influencing in the real estate industry, instead of the people over here who have their investors ready to write checks as soon as they raise their hand saying, I need some money. The investors, the actual operators, are the ones doing the influencing, right? They're saying, hey, I know the macro level is talking about like that, but here's what I'm doing on a micro level. And I think that's an integral part of the conversation to have. So if I'm raising money, here's a couple of takeaways, a couple strategies that I'm going to give you in the conversations that I'm having with my private money investors. First thing is acknowledging that the news is out there. Acknowledging that the news makes money by selling magazines, by selling newspapers, by clicks, and by viewership on TV based on the number of viewers and the number of buyers they have, right? The number of clients that are reading their stuff is where they make all of their money. And people are more likely to go and watch a train wreck than they are to read something positive about what's going on in the market. Why? Because it gets more viewership. So understanding that dynamic and explaining that to your private money investors is a big deal, because now that they acknowledge, oh, you know what? I was being influenced by the media, by a bunch of people who are just trying to get clicks and my time on their website, and knowing that that exists is a big part of them now coming over to your side and understanding you and the perspective that you're coming from. Second thing is understanding, what are they actually invested in? Guess what? Bitcoin lost 80% of its market value, of the capital that you probably had value in cryptocurrency last year. About 80% of it is gone. The stock market has lost about 30% of its value. So 30% of their portfolio value is gone. Right? E-commerce stores, e-commerce is down by like 25% year over year from last year to right now as well, falling off a cliff. Maybe they invested in some of those Amazon stores or Walmart stores or some different e-commerce businesses, and you see all that going on. Tech businesses are down. I think the industry as a whole is down by 50%. There are layoffs nonstop. So understanding what else they have their money into or what they might have invested in, yeah, that makes sense. But then educating them that real estate is a tangible asset, right? And real estate, if bought for cash flow, not only gives you great returns, but won't lose its principal value like all those other industries will. So you have a much more stable investment that retains the principal value and pays dividends on a monthly, quarterly, annual basis. Third thing, kind of parlaying off of that, is that no metric in the economy tracks inflation better than rental rates. Residential rents increased at the same rate proportionate to inflation. Now, if you learn a little bit about inflation obviously came from printing $10 trillion, but even more so, that influenced heavily the energy business and transportation, and which drives a lot of energy costs. Energy costs are the greatest push of inflation, and they're saying energy costs are not going anywhere for the next 2 to 3 years, which means if we have this type of inflation, 8 to 10% is what they're claiming with the government. We all know it's probably more than that. If that continues though every single year, then that you can expect rental rates to continue to increase by that much too. Fourth thing, interest rates continue to rise. If interest rates go up, then that means ability to purchase a home for home buyers goes down. Either prices need to come down substantially, which we're not seeing much of that yet. We're seeing houses sit on the market longer, maybe a couple of price reductions, but they were inflated asking prices initially anyways. But the prices aren't really coming down, which means that tenants cannot afford to go and move into a home because the cost of capital is too expensive, so that they're going to continue renting for the foreseeable future. And then the fifth thing that I would say is explaining the difference between macroeconomics and microeconomics. Yes, from a macro scale, all those things that I just hit on affect the overall economy. But more importantly than anything, than the first four, is this fifth one. And the importance here is understanding from a micro level of what your business model looks like. I don't care if the market's up, I don't care if the market's down, I don't care if the market's sideways. If you have good buying principles, meaning you buy at a discount, you create appreciation, you create value by putting sweat equity into the properties rather than speculating. You never speculate on future deals. You buy for cash flow. You put good debt in place, fixed rate, long-term, long amortization schedule, hopefully non-recourse debt in place on your deals. Right? You have multiple exit strategies. Hey, I can wholesale this. I can fire sale it at my cost basis. I can sell it for a premium above my cost. I can creatively finance, maybe do a wrap mortgage or put up some sort of installment contract or land contract to sell it. Or I can sit on it and let it ride out because the cash flow is there. The cash flow covers all the operating expenses, all the debt service, and put some money in your pocket. If that's a worst case scenario, that's a pretty good worst case scenario. So understanding what the business model is and buying for cash flow and on a micro level is more important than all the macroeconomics. It doesn't matter to me what physical market I'm in. It doesn't matter to me what the general economy is doing. What I care about is my economy and what does this property look like. So when you're going out and you're raising capital from your investors, you need to make sure that you are the one educating them. You don't have to sell them on investing in your deals. You don't need to sell them. All you need to do is educate. If you educate on all those different pillars that I just hit on, they're going to understand my money is safe. The returns are solid. The market is not determined based on the global market. It's determined based on a per deal basis. And you are a great credible source and a great operator to then take their money, deploy it, and ensure that it's safe. That takes the conversation and moves it from them being influenced by somebody that doesn't know anything about real estate to you doing the influencing and ensuring them that this is the best place for them to put their money. I believe in what we do so much that it comes across, hopefully, in the passion when I'm talking to you about raising private money, but it also comes across when I'm talking to my private money investors about what we're doing. I believe in it so heavily. I've been a student of personal finance for my entire life. Like since I was a teenager, I've been studying this stuff for over 20 years. If there was something better than commercial real estate that was more predictable, more tangible, safer, more steady, has the tax returns, has the equity growth, has the principal pay down, has the dividends. If there was something better, I would be doing it, I assure you. But there is nothing better than commercial real estate. So when I go and talk to my investors, I puff my chest out a little bit and I stand very tall and I tell them that this is where their money needs to be. I truly believe that, and the confidence is conveyed when I'm talking to my private money investors. And they can feel it, right? Because that's the kind of deals that I do, and they can sense it in the way that we do our business. So by me being able to convey that to them, they feel more confident in me. By me educating them, they feel more confident in me because I'm seen as a more credible source. Because I'm acknowledging what's happening in the marketplace, they have more confidence in me, and they trust me more because I'm talking about the good and the bad. And all I'm doing is educating and giving them the information that they need in order to compare opportunity to opportunity, and they will far exceed or see that real estate far exceeds anything else that they could possibly be putting their money into. So you and I, we have a responsibility to show people that there's something better out there where they can be making better returns, more predictable returns, tax advantage returns by investing in real estate rather than getting clobbered out there in the general marketplace. So use this information, take it out there, educate your private money investors, share this video with your private money investors, let them be educated by me, and let them know that you have deals in your pipeline that they can invest in. Maybe they're debt deals, maybe they're equity deals, whatever that looks like. You then go share those opportunities with them, and they are gonna see a whole different world of how they can build continuous, steady, predictable, long-term wealth by investing in real estate. I hope this was helpful for you guys. I know this is something that's right in the mix of what's going on. I think there's gonna be more of it coming down the pipeline over the next 30, 60, 90 days as more quirks happen with the overall general market. And I think this hopefully gives you a better stance on having conversations with your private money investors and being able to really educate them and inspire them to do bigger, better things with you in your real estate business. So if this was helpful for you, give me your biggest takeaway in the comments. I love seeing your guys' comments. If you have any questions, I'd love to respond to it. Put that in the comments as well. Give me a like, just hit the like button. That really helps me out. And again, share this. Share this with your private money investors. Share this with your team who's going out and raising money on your behalf. And share this with other people who are in the industry so that way we can do more influencing out there rather than having our investors be influenced by the news and the media. If we're all rowing in the same boat in the same direction and educating people that this is the safest place to put their money and the best returns and again the most tax advantaged, then we're going to be able to push the market in a different direction and help a lot of people build a lot more wealth by investing in real estate with us over the next couple of years. So please like, subscribe, share the video, make sure we're connected on social media. And until next time, be your best.